Well, why don't you introduce yourself?
Sure, Coté. Pleasure talking to you again. My name is Henri. I'm one of the executive technical advisors in the Tanzu advisory team. I come from industry, financial service industry background before joining Pivotal, and then now part of VMware.
So I thought, I have this little on and off series where I talk with people like yourselves, some of your coworkers on that team about like in the industries that you come from and you work on, like what are I don't have an artful way of putting it, but in various organizations and industries, like in finance, like yourself, or when I talk with JT Perry and in healthcare, like if you sort of realize that dream of like, we're going to be able to use software like a tech company. We're going to deliver on that old idea of software eating the world. So how do we use software to eat our industries? The analogy gets kind of vicious after a while, but if we get to be good at our own software, like how can we improve our business, whether internal and external facing? And I think you're pretty good for the finance area, just to kind of go now. So just to set some context, I'm always interested in I'm purposely being jokey about this, the headwinds and the tailwinds, like in the world of like finance, like what are the priorities and the things people struggle with? Like what's going on now? And as context, like back when I started way back in 2015, like back when we were at Pivotal, like, the problem was that like all these little startups are going to come in and steal deposits and customers away from the traditional banks, things like that. So, that was seemed to be a tailwind. I don't know. I don't hear so much about that anymore, but like, in general, like what's going on in the world of finance that organizations are worried about, that is kind of in the area where software and technology might help them out.
Yeah. I think that's a good way of framing it, Coté, because what's really happening in the financial industry, there's definitely a couple of headwinds and some tailwinds, but let's maybe talk about the tailwind pieces. I think there's still a big pressure of what's kind of generally described as fintech, which is a little bit not a buzzword, I think, but it's not just the startups. It's actually the larger tech companies like the Apples, Googles, Facebooks of the world, really becoming players in the financial services industry. But it's in multiple different ways, just them providing capabilities, but also partnerships that are happening in the financial service industry between them. And what they're realizing at the end of the day, it's about driving customer experiences, right? Because what the financial industry is really interested in is maintaining their customer base and ideally growing their customer base. And they've seen some challenges with obviously the newcomers that come along that take some of the market share that they have ultimately. So what they're trying to figure out is like, how can some of the technology really help us accelerate these capabilities? But the tailwind, to kind of tie this back to what's happening, what happened in the pandemic as well, is customers need to have new experiences by which they can perform their financial transactions, right? Now, I want to categorize these as maybe in two different segments, right? There's kind of like your majority of transactions that you do with your financial institutions, right? You deposit a check, you're making some bank transfer, you're using a credit card. All those are getting really commoditized. So the digital experiences in that world the fintech companies or technology companies have been able to drive is creating great customer experiences. Like for example, open up your bank account or whatnot. So it's one category of transactions that are being commoditized. You're not going into your branch anymore for doing those things, right? And during the pandemic, you couldn't go into the bank anymore,
right?
For doing these things, right? But then there's another category of activities as well that's truly based on trust, right? And there's innovation that's happening there as well through things like data aggregation, making data available from multiple financial institutions so that you as a customer can manage your financial health more and more. Let me give an example. Now you might have multiple checking accounts, you might have a credit card, etc. Customers really want to be able to build a trust to maintain their financial health with somebody, right? And for those cases, you might still go into a branch, talking to a person or on the phone. And so there's innovation that's being done there to simplify that. One, like in Europe, APJ, and a couple of other places around the world, it's become to regulation with open banking, for example, right? That you can start aggregating those things, and people starting to trust those capabilities. The US is not quite there yet because it's primarily done through commercial reasons, not federally regulated. So that's kind of like the second bucket. So I think those two tailwinds that are happening there, Coté, is one is, again, the fintech companies really creating a new narrative of creating digital experiences, right? To simplify those commoditized transactions. And the other side is creating this trust relationship that is significantly deeper in the financial industry. So those are kind of the two major buckets that I see.
Yeah, the first, going over each of those, the first is interesting in that it's almost like, I jokingly think of these, like, these, what's the word we used to use? Disruptors, like these startups that are, careening in as like robot dogs, right? Like there's that picture of Jeff Bezos with like a robot dog at some point. And like, I hadn't thought about it as concisely as you were saying it, but it's almost like all those robot dogs became partners and friends, right? Like they're sort of not really threats like they used to be. I mean, any business partner is potentially a threat if something goes the wrong way, or, the lines aren't clear or whatever. But in general, like it seems like banks everywhere have done very well. like as far as like partnering and innovating with like doing new things, right? Like they haven't necessarily, at least I only really know retail banking, like banking for individuals like you and me, but it seems like there wasn't really a revolution in like how banking is done. Like I remember signing up when I moved over to the Netherlands here like 3 years ago. I signed up for one of the new banks, and like, and I remember thinking like, oh, it's a bank. like whereas I was expecting, like, especially us, tech people, you get a new device and you want to go see like all the new things that it can do. Like when the new iOS release comes out, like what are the new features and the things that I could do? And I realized that like, oh, it makes sense, because in banking, like you kind of don't want new features. like
there's a stability thing and trust.
There's several thousands of years of figuring out this is what banking should do and this is what banking should not do. And like,
that's right.
I don't want that.
Yeah, there's a little bit of perception that was created as well, right? Like some of those startup banks as well, that it's whiz bang user interfaces, great digital experience. But to your point, right? It's still a bank at the end of the day, right? And actually, in some cases, a lot of banks actually failed because they create these beautiful user experiences, and then it still took 2 days to clear a check or do transfer. It's like, wait, that's not a new experience.
No, and I think it's as you're saying the second part, like that's a good example you just went over of like the focus becomes good customer experience. Like that's a means to the other business need you had, which is retention and growth, right? Like retaining the customers and getting new customers, but then also growing. You would say deposits, right? I mean, is that what's the word you use to focus on? Like in software, we would, like what's the account value that you have? Either
net new assets or assets under management. Those are kind of like key focus areas.
So you're always trying to, you say products in the financial world, you're always trying to get people to consume more products that you have, right? And then decrease the deposits that they have.
Yeah, it's kind of like the wallet share that you get for those customers.
And like you're saying, you do that through better customer experience nowadays, which I think the example was great. Like you can have a great mobile app, but then if it takes 2 days to have a deposit, who cares? Right? Like
that's right. Yeah.
Yeah.
And it's kind of what's happening in the industry. Like I think of it as a couple phases that they went through, right? Back in the day, it was really about getting as much savings into the bank, because then the bank, from a business perspective, could then loan those things out, right? And so then all of a sudden, interest rates start going down. So the return on those deposits were not significant for the banks, right? So they had to change their cost structure. And so one of the things that happened is they started using ecosystem players that provided the core banking capabilities that are out there, right? Your FISs, Fiservs, Temenos, and all that. Banks were starting to use those because that's a cost optimization originally. But then, like what I said, the fintech companies came in and go, oh, great, we can now create a lot of experiences for your customers. But ultimately, it's about maintaining your customers and then creating an ecosystem around that so that your customers feel like, one, it's simple to do my financial transactions, right? So the first bucket of all my transactions, my day-to-day stuff, I don't want to really think about that. It should be easy, right? Like bill paying, credit card transactions, etc. But now you also want to building the trust element of it as well, so that you stay with the customer. So you don't want to create churn in your customers in that particular aspect of it. So the latter one is interesting because some of the digital experiences are playing as well. Like what I mentioned is the aggregation of a lot of financial data so that you now know what's in my savings account, how my credit cards doing. If I now want to create a non-secure loan, make that easy, right? I don't have to think about taking weeks for doing that aspect of it. So that's another experience as well. And something that's also coming in more and more newer is creating stickiness is this notion of, buy now, pay later. We can already have some of those concepts, but now pushing this all the way to your point of sale, right? So if you go to, like in the Netherlands, to Albert Heijn, or to pick any of your favorite grocery store or wherever else, and you really don't want to pay now, being able to do a financial transaction where you say, you know what, I want to pay over 4 time periods, for example, right, when you're making the purchase. Now think about that for a minute, right? That seems like a very trivial experience to create, right? However, it creates also a deeper relationship between you and the financial institution, right? Because now you're creating this payment program per se that is non-secure, but you stay with the bank because they provide this capability, right? So more and more of these experiences that you want creates this deeper relationship with your financial institution.
Yeah. It's like a not complicated, but very featureful layaway program.
Yes.
Except, layaway is the opposite of that, where you don't get to buy it until you have the money. they just reserve it for you, but still. Yeah.
I just want to make it simpler, right? It's like you love the shiny thing that you just want to buy, and at the same time you can pay over four periods or something like that, or whatever you're choosing it. But you can do it right at the point of sale.
Yeah.
So
do people actually do that? Like, is that being done places?
Yeah, there's over the last years about a 40% uptake in providing those capabilities in different forms, at least in the US.
I guess not so much business wise, but for me, like I would charge a cheaper interest rate than the 18-20% on a credit card, right?
Yes.
And so somehow the arrangement is that I can pay it over weekly or 4 months. And I assume I have to pay for that somehow. But there's maybe hopefully just a single percentage or something, or just a flat fee that I pay to do that rather than, a steep interest for borrowing that money.
Well, that's what they're realizing, right? Is that we all use credit cards, right?
Yeah.
But the credit card fees are significant, right? So they're creating these programs to either at a lower percentage points or even at some cases, no percentage points. And again, it's just to maintain your relationship with the bank, right? You don't go to a third party or a fintech company to that creates a product for buy now, pay later, right? It's just maintaining that relationship, and that it's at the end of the day, financial institutions want to be able to manage everything in your complete life per se, right? They already have enough information to understand what your habits are. But maintaining you as a customer is significant, because then you get some other products you can do, brokerage capabilities, etc.
Yeah, it's similar to what I kind of, I don't know if intuit is the right word, but I feel like what happens in the telco market, and there's which is basically, I don't know the technical terms for this, but like in the telco world, I think that market is pretty saturated. It's just like all the customers have kind of maxed out on what it is they're going to buy, right? Like some of them maybe could buy, you know, more cable channels or faster internet or unlimited cell phone, but it's sort of like there must be an equilibrium where like there's the maximum amount of money being spent, you know, plus or minus 100%. And so kind of like you're talking about, what you have to do in that market is come up with new things to sell to your existing customer base, and then also like retain the ones that you have, right? And like I would assume banking is kind of similar, kind of like I was joking that there's thousands of years of figuring out what banking is. It's kind of like, everyone who's going to has a bank account, and there's the underbanked population that you can get to, like finding new customers and things like that. But you're sort of like, so you need to get your existing customers to do more with you.
because at the end it's the more assets you have under management as a financial institution, right? The more you can leverage that for example, your corporate side of the house or corporate bank side of the house, right? And so ultimately you try to kind of maintain that relationship. It's kind of the same principle as that, like if you have Amazon, everybody signs up for Amazon Prime, right? Or Costco. Majority of the revenue is driven by membership, not all the stuff that they sell. It's just maintaining that ecosystem, because that's a continuous revenue stream that you're getting, and you're maintaining your assets under management as well, which you can leverage at that point. So that's the ultimate game. It's not about fees anymore. Fees are dwindling down anyways.
So we have some teams who are writing software, right? And hopefully they're like connected well to the business side, you know, like they're kind of working. This is our ideal case. They're working with whatever the business owners or the equivalent of a product manager is in and like let's say you're just you're like regular bank incorporated, right? Like you're like a high mid-sized bank, right? So you're not necessarily a regional one, because regional banking seems to be constrained by just, they don't have a lot of money to spend on customization, so they go to the they just buy off the shelf banking systems and
the white label solution or something like that.
Right. Which is a whole other area. But like you're a big enough bank, a regular bank, to like employ hundreds, if not thousands of developers to do some stuff. You're like, all right, we're at the start of our journey. Like what are they going to be doing? Like they have an inkling that customer experience is good, but like what do they start doing to kind of wade into what you and I were just talking about?
Yeah, I think it's important. So you kind of mentioned tailwinds and headwinds, right? So let's first kind of recognize some of the headwinds that are happening in the industry as well, because that's important for those banks to really be able to do it. I think a headwind is clearly a lot of them still have core banking heritage as well. So they're still spending. So let's assume it's an existing bank, right? Versus a net new bank. So they're still having a lot of resources that are focused on that aspect of it. So first you have to recognize that is a commoditized solution these days, right? You buy this from another company, even a mid-sized bank. Now a large bank would still maintain their own because of many different reasons or complexities, but mid-size, recognize that it is a commodity. Move on, right? So, and this is important because now your resources can focus more on creating customer journeys. Like how would you want the interactions to be with your customer, right?
Yeah.
What creates stickiness to you as a solution? And we've seen some interesting examples for some banks that, mid-size that have aspirations to be bigger, but then also it's the second thing that they have to recognize is this lack of focus as well. Typically banking business has been around, purely thinking about revenue or purely thinking about cost aspect of it, but now they're having to think about this thing called customer, which is very strange. It seems like intuitive to you and I, Coté, like many customers that we talk to, right? Like, hey, customers should be at the center. Most banking they're not, right? They're thinking about either the commercial side because it's more money flowing in versus actually the retail customers or creating a brand as well. That's new for them as well. So first they have to establish this notion in those product teams, kind of this product thinking that you and I have talked about before as well. And we from Pivotal typically thought about is creating a product thinking mindset first inside of a bank. Like, what are your products? What are your customers? And then creating a holistic view of your customers as well, right? If you don't have a holistic view of your customers, then you can't even start in these banks. So that's first and foremost you want to create. And then creating this notion of a product factory, per se, where you have product teams focusing on those customer journeys, understanding the customers, and creating experience and testing out, already experiencing it, really improving net deposits. Are you getting net new customer? Is your customer acquisition going down for those things? That becomes really important for them to do. The software development piece is kind of like the easy part. The harder part is really focusing on the customer and driving product strategy with that. And creating alignment in the organization to make sure, like, okay, what is it that we're focused on? We're not trying to create thousands of products for the customers, right? Just focus on what your customers are needing at that point.
Yeah, that's interesting. To summarize it, right? Like I think before you even worry about those software development teams, right? Like there is a foundation that you have to set. Like and a lot of it, to your point, is like not normal for regular bank.
That's right.
And it kind of, it starts with, when you were saying, like, getting to the commoditized things, it's almost like 10 years ago, the transition to SaaS that I used to think about, which is like, if you have a cloud strategy, look at your portfolio and figure out what you can just move to SaaS, like email, maybe your ERP system, whatever it is, like just do that first and like do that for 12 months. Right. And because like, I mean, exactly the point that you said, like it's not only money that you'll free up, but it's sort of like attention and priority and resources and like all this stuff. And then you can like shift all of your corporate attention from dealing with the email server going down and worrying about this. And, but then for like kind of core systems and things like that, it's worth thinking, like, do we need to run this core system? Right. Like that's the good thing to shift from. And
well, to your example, right? Like the new banks that are, internet first banks, they don't buy a banking system. They just use, bank in a box or bank through APIs, per se. Right.
Yeah.
And so you kind of have to do this rationalization of what is core versus context in your company, your portfolio. Core banking is not something that everybody just expects you to have it. So outsource this or just purchase one from an ecosystem provider, and then pivot your teams to help drive. Like, no, our focus is really or outcome that you want is that new customers or higher deposits, tenure of your customers, whatever the metrics are that you want to focus on.
Yeah. And then the end of that journey, one day, maybe we should just have a whole conversation about like legacy problems in finance. I've been thinking that the new little booklet I write, the next one should be all about like dealing with legacy stuff, and more of like a strategy executive layer than like, use the strangler pattern.
Yeah.
Because that, anyways. But the way you put the end is, it's like rediscovering the customer, right? And it is like, it is worth kind of making that explicit, because I think in a lot of the thinking that I and we on this side do, like we just kind of assume like and then do product stuff. But you kind of outlined a good way of looking at it is that like, well, it's not. And this sounds insulting put this way or pejorative, but like, hasn't really been part of the business of banking to like pay attention to what your customer does. Right. And to put it in kind of a neutral way, that's because, as you were kind of talking about at first, like banking is kind of commoditized. It's just like, you have a savings account, you have a checking account. I don't know what to tell you. Right. Like there's no,
yeah, that's right. What else do you need?
there's not really much to differentiate on, right? But if you actually are getting to the point where customer experience is something you're differentiating on, then you have to like learn the techniques of like paying attention to the journeys that the customers go to go through the life cycle that they have, how you improve what their experience is.
Yeah, and that's an important thing that's kind of the transition that's happening, Coté, because spot on, right? Is that banking is kind of commoditized. You have a bank account, that's not interesting anymore. What is interesting is understanding the financial health of your customers, understanding the life events that your customer has, right? So to put it in perspective, if you take the life of a customer, they go through different transitions, right? Understanding what those things are and how do you simplify that event. For example, they're going to go to high school. They're going to go to college, right? Your financial life changes during those events. Or, when you have your first job, when you actually start getting think about retirement or vacations that you have done. So for a financial institute to understand that and then focus on how do I make those life events simple to do, right?
Yeah.
So that ties to even to a macro level, in my opinion, because it's like even when people say this disillusion of digital transformation that most of them have is not gravitated towards those things. Because if you just talk about, oh, I'm making it simple for an account open. Okay. So what? That you go from 5 minutes to 10 minutes or 10 minutes to 5 minutes, right? Interesting. But how does it tie to where am I at in my life to say that it's relevant of what I'm doing?
So what is the state of open banking in the U.S.? Because I forget what the EU thing over here is, but we have that over here, and I kind of see the effect of it because I only have one bank over here, and of course, EU open banking doesn't work with the US, so I can't pull on my existing stuff. But yeah, I mean, what's been happening in the last 3 or so years since I've been more in the US banking system with that? Is Mint just going to be replaced? Is that all set to go, or how's it working out?
Yeah, it's interesting. There's a lot of commercial players now. I mean, Mint obviously was to a certain extent the key one in the United States to kind of help aggregate information, right?
Right, and to demonstrate what could happen to customers.
That's right, and they've been able to get a pretty good solid business model around it. Now, to compare it a little bit, just to kind of step back for everybody, is that EMEA, APJ really have set up this notion of PSD2, right? There's just kind of like a lot of the standards for open banking, which is also moving to open loans, open insurance regulation that's coming, right? But again, fundamentally, the notion is providing your financial institutions with an API that's consistent, that you can build new capabilities on, right? In the US, it was more Mint saying like, you know what, we're going to just scrape your banking website, right? And then the banks didn't like that, so now they created some APIs, but they're not consistent per se. Through regulation. But now you have all other players like Plaid is one example that has signed up a lot of banking customers to allow you to aggregate financial information at your bank versus at Intuit or Mint, right? That's different because now again, this creates this new relationship where you, for example, if you at a Schwab or Citibank or JPMC, fill in the bank, I can now pull in my other banking information. But they're pretty much using a third party to doing that does the aggregation work. So open banking as an API standard is not consistent in the US. It's primarily driven through commercial ways like Plaid, like Intuit to creating those solutions.
Yeah. But it's I guess it'll get, having your personal finance dashboard is certainly nice, right? Like, I have a Schwab account and they have it all in there. So it's easy just to it's almost to some extent faster than using Mint just because because of the integration challenges of Mint and reconciling. Whereas I can look in there and it's a little easier to get a big picture view. But, I think you're right. Or the second thing you're pointing to is what would be more interesting is if you can have integrations between all of those products that you have, right? Like when we just bought a new house here and we just got a mortgage with the bank that we have because that's what came up. There's limited for expats or whatever, but
that's right.
They're not limited. It was the easiest one and it just was coincidental. But it'd be nice to just sort of do some sort of OAuth authorization, unlike my financial information and be like, all right, give me some offers, right? Like
That's right.
versus like, we worked with a broker and filled out all this stuff and you got to do that. And there's a lot of, oddly enough, literal paperwork involved in it.
Yeah. You kind of asked it's interesting question. I think aggregation of information, especially of financial information, let's talk about the US, right? Those are good things, but it has to lead to something else.
Yeah.
And you have to keep in mind the notion of trust. Like if you're doing a Google search, on Google, you're okay that you see some ads, right? To a certain extent, right? But it's a little bit of violation of privacy of the things that they know. But wait, now you're doing it with my financial information.
Right.
So back to you saying, like companies like Schwab already have a trust relationship with you. And so you don't want to get like random advertisements per se, right? What you actually want is like the next wave of, in my life journey, what else can you help me with based on the information that you have, right? Is it to simplify making a loan, right? I see that you reached that point that you might want to purchase a home. You can make an offer, say, well, you know what, Coté, you have so many assets in equities, something else.
Right.
Why don't we create you a package that allows you to do this, right? So I think that's the next wave, that your financial institutions can use that complete view of you and your financial life to make really more subtle recommendations versus the advertising notion of it. Does that make sense? That's where the new value comes in.
Yeah, no. I mean, that's exactly the scenario that would be nice, is to not have to like I don't want to be the integration point for my financial life, right? Like all of that information exists somewhere. It just like, for many, many reasons there are good reasons, and then just like, old, legacy reasons, like it just, stuff doesn't work together. And, you bring up an interesting point that like, I always think from a strategic point of view, trading on brand and trust is always like a mysterious, weird thing for strategy, right? It's the mechanics of it are often odd, but this one is pretty clear that, even more so than like healthcare data, I think, at least for me personally, is that like I already trust my bank with a lot of my information, and I would I think if I trust any bank that I trust with my information, I would trust them to have information from my other banks, right? Like I don't really want to hold that stuff at arm's length, versus like, maybe I can see that in the healthcare world, like there would be certain things that I don't want my insurance company to know, right? Like, I mean,
that's right.
It's almost, I don't know if it's a prisoner's dilemma, but it's some kind of like logic dilemma where like, where is the optimization of information I give them versus like now they're too optimized on their side and I lose out on my side. Like I need that equilibrium. Whereas like with banking, I mean, I guess there could be a scenario where if they could calculate my credit better. I mean, there's things you could go down, but in general, there's probably more positive outcomes on both sides if you can trust this data is aggregated.
I think so. It all comes to testing some subtleties, right? Like, simple example, like, you don't want to have it all sound like, hey, you're looking at your credit score. That feels a little bit violated, right? Because there's implications of it. However, to make your financial life simpler, like for example, if you have options or something like that with like E-Trade for your company, I'm just making this up. But you recognize you sell out of those on a regular basis and you transfer that money to your, say, Schwab account or any of the other brokerage accounts. Offering them up saying, hey, you know what? I see you doing this on a regular basis. I know what your vesting schedule is. How can I help you out to do this automatically for you? Right.
Yeah.
That helps the institution because now the assets are moving. Right. But it creates a consistent trust relationship that you're not offering new products per se or upselling you or creating more fees. You know what? It's not a violation. It's more saying, hey, let me help you out. I see you do this regular and kind of remove that toil from you as a customer. I think that's where the value is going to be created and creating these subtleties that continues to emphasize trust.
So, I mean, that's an interesting palette to start to paint with, to do a dumb metaphor, is like, so if you as a bank could rely, how would you start new strategies and new, it could just be a feature or a new line of business or a new whatever. Like, how could you rely on the trust that people have and come up with new products out of that and new ways to retain people versus like, anyone could like let you download a CSV file of like 10 years of financial history. And then you could go upload it somewhere and see what the analysis was. But like, I
think you have to, it's different. A couple of things you have to do, especially in financial. One, you have to be open and transparent about what you're doing and how you're doing things, right? I go back to what PayPal did a while back ago, which I thought was not a great thing. You could actually see how your data was being sold to all kinds of third parties the moment you open up a PayPal account, right?
Right.
Which that didn't create that much trust, in my opinion, right?
Right.
But financial institutions should really highlight this as well. This is what we know about you. This is what we see, right? And it's showing like who have access to it, including internal people inside of the company, right? So first and foremost is creating transparency. What is being done with your data? Who has access to data as well, is an important thing to maintain the trust capability as well. And then internally, you have to make sure that you have to start experimenting with some of the things. So if you create a new feature, it's good to debate that inside of a financial organization, apply to a regulatory aspect of it, but you slowly want to test it out in the marketplace as well. And that's when not as natural in most financial institutions to test things out, right? Create the hypothesis of something. Maybe do some A/B testing in your customers. But again, be open and transparent that you're doing this, right? To say, hey, we're trying to figure out what are good products for you. That should become part of the narrative for the banks as well.
Yeah, and I think that's like the goal of going through that journey is, you discover what your customer is doing in the life cycle, and you're trading on this trust that you have, and then as people jokingly say, that's when the real work begins. That now you need to actually just like go through the innovation cycle of just trying out things, and I mean, obviously, like building up all the safety nets and guardrails and whatever metaphor you want to use. To make sure things are that you maintain that trust and also that things are secure and done well. I mean, all of that, right? Like, I always think it's funny when not funny, but like it's slightly eye rolly when people ask about security, because it's sort of like, well, yes, it's secure. That's like, it's like, it's like if we described a new type of food to you and you asked, does it taste good? And it's like, well, that's the intention, is that it has to be.
Yeah, it's a feature of what you already bought, right? It's not like an afterthought that you're trying to do.
Exactly. Yeah. All right. Well, I think that's a good. As always, we never get down to all of the little footnotes and details that I originally wanted to, but I think we came to like that's kind of the setting for like, if you have an understanding of like, doing design driven or product driven software or whatever you want to talk about it. And you're like, oh, we need to have Kubernetes installed, right? Like, and all the frameworks, all the stuff that we would talk about in Tanzu land, right? Like getting to that, I think what's interesting in the banking world is like, well, the whole goal of what we're getting to is customer experience. And what that means in this context is we want to come up with new ways that our customers work with us, new features that we have, ways of working with aggregated data that they might trust us to use. And essentially just taking that product mindset where we're really paying attention to like, well, so how do we make our customers' lives better? Right? Like how do we find problems they have and improve the current jobs to be done that they have and just work on that, instead of like, we're a bank and we just provide what we have, which is a valuable service, but there's now the potential to do all sorts of other things to grow and get new customers and retain the ones.
Yep. You need to go beyond creating just a savings account. That's
right. Yeah, that's right. Yeah, because as far as I can tell, saving interest rates and savings accounts, they don't really fluctuate that much. So
no. And yeah, remove the worry out of people's lives, simplify their lives in their financial side. So I think that's what it's all about.
That's good. All right. Well, do you have, are you in Twitter or LinkedIn? Do you have some weblog that you post your thoughts to? What do you want to add?
Yeah.
To go look at?
Be on billboards, right? But Twitter side is HM and obviously follow me on LinkedIn. Do a lot of postings in a couple of different areas around secure supply chains and financial services. That's where I hang out.
All right. Well, that's great. Well, yeah, thanks. That was fun stuff. And as always, I broadcast these as videos sometimes. Also, it shows up in the Tanzu Talk podcast. But if you want to find all of that, you can go to tanzutalk.com. There's where you can subscribe to the podcast. If you click on the videos thing, you can go see the videos that we have, like this one that you've seen, and check out everything that's going on there. And we'll see everyone next time. Bye-bye.